Hey guys, welcome back. My name is Danae Wolf. I'm a financial clarity coach and a profit strategist, which means that I help ambitious entrepreneurs like you increase your profits and decrease your stress. I do that by teaching you financial literacy so you can gain financial clarity and confidence to help scale your company to the next level. Now, if you are here live with me, let me know in the comments. If you are catching the replay, also let me know in the comments. Full disclosure, guys, I need you to engage with this video as much as possible so that the algorithm gods will show it to all the people, because I believe that knowledge is power and we want to share that power. Now, I hope you are all having a great day. I have got my Christmas tree up, my decorations. I got my little Christmas candle lit. Just call me Santa Claus. I am in the Christmas spirit. I absolutely love this time of year. And I feel like for entrepreneurs, it's so special because we really have this moment of like reflecting, right? And we get to look back on how the year's gone and think about what we liked, what we didn't like, and really start manifesting and envisioning all the things that we want for next year. Also, this time of year is extremely special for moms, okay? Not to discount any of you dads, but for us, there is just something so incredible about seeing the magic of Christmas through your kids' eyes. So love this time of year, love it as a mom, love it as an entrepreneur, and I hope that you guys are all having a great season as well. Now, today I'm going to be teaching you guys how to pay yourself the right way so you don't send the wrong message to the IRS. Something that I am asked all the time from entrepreneurs is, how do I pay myself? And what I want you guys to understand, and what we're going to dive into in today's training, is how you pay yourself is determined by the type of entity that you are. So when you decide to go into business for yourself, you have several options when it comes to choosing the type of entity. So the first choice is to literally be in business as a sole proprietor. What this means is that you yourself are your business, and your business is you. There is no separate entity. A sole proprietor simply means me, as an example, Danae Wolf, is doing business as Danae Wolf. I have not created any type of an entity. I have not filed any paperwork. I am simply in business as myself, and customers are paying me directly. This is 100% legal. It is 100% allowed. It will not do anything to your taxes. Where the difference comes in is if somebody were to sue you, they would be suing you directly, not your business, because you are your business and your business is you. So in order for you to get that legal protection, I want to see you guys set up an LLC. But to be clear, when it comes to taxes, your LLC or your sole proprietorship, they're going to be taxed the same. So I think that's a very big misconception, is people think they have to form an LLC for a tax benefit. There's not, in fact, a tax benefit. There's a legal benefit. Now, I'll also tell you, most banks won't even allow you to open up a business checking account if you're a sole proprietor. You would need to have formed an LLC. So moral of the story is, at minimum, guys, please form an LLC. It's not expensive, it's not time consuming, and it is the best choice. But when you pay yourself, okay, which we're going to get into, whether or not you're a sole proprietor or an LLC, we have to take all of that into account. Now, the next option for creating an entity in your business is you could take your LLC and you could elect to be taxed as an S Corp. Okay, that's a choice that you can make. So your entity would still be an LLC, but you are choosing a tax status of S Corp. And the other entity type that you could be is a C Corp. No one on this channel is going to be a C Corp, so we're not going to be diving into that. So when you decide whether you're going to remain a sole proprietorship, an LLC, or elect as S Corp, I want you to understand that the way in which you pay yourself is determined by that decision. So let's talk about the proper way to pay yourself based on the type of business that you are. So if you're a sole proprietor, like I said before, you have not formed an entity, you are in business as yourself, which means that your customers are paying you directly. So boom, you're paid. As soon as they pay you, you are paid. Now you do want to make sure that you are accounting for taxes, because as a sole proprietor, you are going to owe taxes. As an LLC, you are going to owe taxes. As an S Corp, you are going to owe taxes. As a human in America, you are going to owe taxes, okay? Now, we will talk about one of these entities that does have a tax benefit, but specifically for sole proprietors, you are going to get paid from your customers directly because you do not have a business entity. So it's not going to be a process of the customer pays your business and your business pays you. You sole proprietors, your customer is going to pay you directly. And just a fun finance tip, make sure to account for your taxes. Now, hashtag disclaimer, I am not your tax prep, but typically a good golden rule of thumb is to set aside about 25 to 30% of your pay for taxes. Keep it in a savings account so that you have it ready for tax time, and go ahead and pay yourself the balance. You can think of that as your net paycheck. Now, for those of you who have formed an LLC, which is going to be the majority of you, please listen to everything I am about to tell you, because I see this done wrong a ton, but I will say not as often as I see the S elections done wrong. So let's talk about the LLC first. So as an LLC, here is how you are going to pay yourself from your business. You're going to obviously have your business checking account set up, and every month you will need to be calculating what your profit is. So we're going to take our revenue minus our business expenses equals our profit. Guys, you can think about the profit in your LLC business as a gross paycheck. Remember back when you were an employee and you had a gross paycheck? What happened to that pay? Taxes were deducted, and then you had your net paycheck. It is the same exact thing when you are an LLC. So you're going to calculate what your profit is for the month, and then you're going to set aside 25 to 30% of that for your taxes. Please speak to your tax preparer to get that specific number. Or if you'd like to work with me, go ahead and shoot me a DM and I will help you get a more accurate number for that percentage. But you're going to set that money aside, and then the balance is your net paycheck. Now, here is the critical piece of this. I want you to pay yourself that net paycheck by either transferring from your business checking to your personal checking account or writing yourself a check. I find writing yourself a check to be a bit antiquated. Just go ahead and set up the bank account so they're talking to each other and you can make that transfer. But that is the way it must be done. What you cannot do, okay, absolutely cannot do, and if you're not listening to me right now, if you're doing something else and multitasking, I need you to give me your undivided attention. You cannot pay yourself by charging personal expenses to your business. Now I'm going to say it again for the people in the back. You cannot pay yourself by charging personal expenses to your business account. Do not take your business debit card and pay for your mani-pedi. No. Instead, log onto the bank, and it's a funny story, guys. You can do it right from your phone. Right from your phone. Technology is fabulous, okay? Get on your phone, make a transfer from your business to your personal checking account. That is the way that you pay yourself properly. This is the way that we don't send any wrong signals to Uncle Sam. Because remember, when you formed that LLC, you are telling the government, my business is separate from me. Well, if you start paying for personal things out of your business, you're commingling, you're saying you're the same, right? You are removing that protection. It's called piercing the corporate veil. It is a live for another day, but just trust me on this one, guys. The proper way to pay yourself is to make the transfer to your personal checking account. not to just swipe your business debit card for personal expenses. That is not what you want to do. And let's face it, guys, we have so much to think about and worry about as entrepreneurs. The last thing you want to worry about is getting on the bad side of Uncle Sam, right? Just be compliant. Just do it the right way. You can literally get on your phone, log into your business checking account, and make a transfer. It's going to take 3 minutes. So if you're in a situation where you're at a store and you're like, oh, I don't have enough in my personal checking account, I'm just going to use my business debit card. No, take the 3 minutes while you're waiting online, and instead of scrolling on Facebook, please go in and transfer the money. Guys, it really does not need to be this complicated thing. I think a lot of times we stress ourselves out and make a big deal out of things that don't need to be a big deal. I mean, think about it. You don't really question getting up in the morning and brushing your teeth, right? Because it's a habit. It's a part of your routine. Make this a habit, okay? You are in business to get paid. That's the whole reason you started your business. So you should know exactly how to pay yourself the right way and make it a habit so that it always happens. Now, as an LLC, you do have the option to elect S Corp. Now, let's talk about how to pay yourself the right way as an S Corp. Because while I see a lot of LLCs running personal transactions through their bank accounts, and that's wrong, through their business bank accounts, what I see even worse is the way that S Corps are paying themselves. So let me explain what the S election is. So when you're an LLC, you have the option to tell the government that you are electing to be taxed as an S corporation. The reason that a lot of businesses make this S Corp election is because it will actually save you money on taxes. Now, full disclosure, this is not a deep dive into S Corps, but what I will tell you is an S election is not the right fit for every business. You do have to be at a certain size. Typically, if you are at about $50,000 to $60,000 a year profit, I like to see you start running the numbers to see if S election makes sense for you. But if you've already done that and you know that an S election is the right fit for your business and that's what you currently are, let's talk about the proper way to pay yourself. So as an S election, you are allowed to split your pay into 2 buckets. So what you're able to do is pay yourself via a draw or a distribution, which is the same way an LLC pays themselves, right? An LLC makes a transfer from the business checking account to their personal checking account. So as an S Corp, you're able to do that, and that is 1 bucket, so to speak, of your pay. The second bucket of your pay is going to be paid to you on salary with actual W-2 wages, just like back when you were an employee, only this time you're an employee of your own company, which means that you have to put yourself on payroll. Now, I strongly suggest Gusto for all of your payroll needs. I love them. If you guys want me to make an intro with my rep there, shoot me a DM and I will introduce you to Mackenzie. But I can't say enough good things about Gusto. But even if you don't go with Gusto, please, for the love of everything you hold dear in this world, do not try to do payroll yourself, okay? I am a seasoned accountant. I've been doing this for years. I don't even do my own payroll, okay? Payroll taxes are a nuisance, they're complex, and you have better things to do with your time. So you're going to have to make sure that you set up payroll, and now you're going to be able to take a portion of your pay via W-2 wages on payroll and a portion of your pay via draws. Now, here is how this all works on the technical tax side. Essentially, the money that you are paid in draws is the money that you receive as a return on investment in your company. It is not money that you receive for work done in your company, which means that you don't have to pay payroll taxes on that money because it's not payroll, because it's not for work you did in your business. That is where the tax savings comes into play with an S election. So all of the money that you pay yourself via a draw, which means you're either writing yourself a check directly from your business checking account, or you're transferring money from your business checking account to your personal checking account, that money does not have to pay payroll taxes. So it is taxed less. Now, I know what you're thinking. You're probably like, okay, well, if the draw is taxed less, I'm going to pay myself 100% on draw. But it doesn't work like that, and I'm going to tell you why. So in order to prevent you from taking 100% of your pay and draw, the IRS has created the reasonable salary clause. So what they've said is, yes, we're going to allow you to get taxed less on that draw, but we're also going to mandate that you pay yourself a reasonable salary. Now, of course, the word reasonable is open to interpretation. So let me tell you the two guidelines that you should be considering. So when you are thinking about whether or not your salary that you're paying yourself from your company is reasonable, you want to think about, number one, what is the work that you do in your business? Because remember, the salary that you are getting paid through your payroll company is for work you do in your business. So you want to think about that work you do and think about what you would have to pay someone else to do it if you were to hire someone to take your role in your company. Now, some great way to research this is to look on Glassdoor, Indeed, various websites that will tell you what those types of positions are getting paid in your area. The second thing to consider when you're trying to determine whether or not your salary is reasonable is you want to look at the split between what you're taking in draws and what you are taking in salary. So if you are paying yourself 90% on draws, which is where you get the tax break, and only 10% on salary, probably going to trigger Uncle Sam, right? So you want to look at that split and really make sure that it makes sense and it seems reasonable. Now, what I also encourage you to do is document all the things. So what I'd like to see all S-Elections have is a Google Drive or a Dropbox folder where you document the way in which you came up with your pay. So I'd like to see documentation of, this is the work that I do in my business. Here is a link to Glassdoor, which says that people in my area doing similar jobs are getting paid $60,000 per year. That is why my payroll is $60,000 per year. And then I pay myself $70,000 via draws, right? Have all of that documentation and explanation in there so that if you were to get audited, you can show Uncle Sam that there was a thought process you put into this, that there was a method to your madness. Now, the big thing that I want you guys to understand about the S-Election is that you are going to be taking draws and a paycheck, but the tax break only happens on the draw. And a lot of times what I see is entrepreneurs elect S-Corp because they are told that they save money on taxes. And what they hear is that they have to put themselves on payroll. So what they do is pay themselves 100% on payroll, and they're not taking any draws, which means they're not getting the tax break. And guys, I see this all the time, and I just want to scream, and it makes me so sad, and it lights me up even more to do what I do and give this free financial education, because you guys have to understand, if you are an S-Election, yes, you have to be on payroll, but you also have to take the draws. Otherwise, you did not get a tax break. So here is what I want all of my S-Elections to do. I want you to pull your profit in real time every single month. And then I want you to make the decision as to what that split is going to be and what you are going to pay yourself in salary for the work you did in your business, and then what you're going to take in draw, which is what is going to be taxed less. I do not want you to set it and forget it. And what I mean by that is a lot of times I see S-Elections setting themselves up on salary for the year and then just going on about their business and not really thinking about that salary. And what happens is, especially this time of year, I'm starting to meet and interview with new clients, and what I'm finding is they are S-Elections and they set themselves up on salary for the entire year. And now when we look at that split, it doesn't make sense, because your business might have gone down this year. It might have grown this year, but setting it and forgetting it is never a good idea. You want to look at it in real time every single month and say, okay, my profit this month was $10,000. I am going to pay myself a $4,000 paycheck through my payroll company and have my $6,000 draw. That is the split that makes sense for me based on the work that I do in my business, right? That is how I want you to do it in real time. Because if you always have yourself on, let's say, a $5,000 salary, and what if you have a month where your profit was only $6,000? That means that out of $6,000, you elected for $4,000 of it to be taxed higher. That's madness, right? That's not a reasonable split at all. If anything, we want to get as close to 50% as possible. So this is why I'm such a big proponent of you guys understanding your numbers and maintaining them so that you know this stuff in real time and you can get the benefit of an S election. I absolutely love S elections for what they can do for entrepreneurs, but I also know most of you are running them wrong. You don't know how to use it the proper way. So I hope that this video was able to help you today. So to recap, my sole proprietors, your clients pay you directly. That's how you get paid. My LLCs, your clients are going to pay your business into your business checking account. You are going to pay yourself by transferring that money to your personal checking account or writing yourself a check. What you're not going to do is pay for personal things out of your business checking account. And then for my S elections, you guys are going to pay yourself in two ways. One, on W-2 wages through a payroll company. Definitely check out Gusto. And the second way you're going to pay yourself is by taking draws. And remember, the draws are where you get the tax benefit, and you want to make sure the pay that you're taking from your payroll company is quote unquote reasonable for work that you're doing in your business. And also the split between how you paid yourself on payroll and the draws you took is also reasonable. So I hope that this was beneficial today. If you have any questions, guys, shoot me a message. I always respond to my messages. I love talking to you guys. Usually I'll even come back and do like a voice memo. You can find me on Instagram at The Chic CFO. I'm on there all the time, or you can reach out to me directly on Facebook at Danae Wolf. You can even leave comments in my YouTube comments section. I will respond in all the places. Now, if you guys like today's video, please let me know in the comments. I need all the love that you can give to help the algorithm show this video to more people. And if you have any entrepreneurial friends that would benefit from everything we learned in today's video, please send them my way so that I can share this replay link with them, or you can tag them right here in this video. I will see you guys next week.